Joining us now is Gil Luria, D.A. Davidson senior software analyst. He has a neutral rating on Salesforce. Gil, not sure if there's enough here to change that neutral rating. There are questions about how much room they had to expand margins, but they seem to be doing it.
Yeah, that's right. They've done a lot this year, and this quarter signifies another part of that accomplishment. The activist investors that came into the stock pushed the agenda on the fact that Salesforce had far below peer margins, and Salesforce did the work this year to catch up. And as they exit this year at 30% operating margins, they will have accomplished that goal. And this is a good result, and the fact they raised bottom line guidance is the good result that you want. The bigger question, though, is how can they accelerate revenue from here? They're barely growing double digits. And the real question on the call is going to be, what is it that's going to accelerate that growth going forward on the top line?
Yeah, and AI is something that every enterprise software company has to talk about now. We just had Google Cloud CEO here on Overtime yesterday, their announcements yesterday. We're going to hear from ServiceNow soon. We're going to hear from Adobe. Lots of companies trying to make the argument we can monetize this. What do investors need to hear from Salesforce to be convinced?
Something concrete. When are these products going to be in general availability? When are customers going to start paying for them substantially? When is it going to be a real contributor to revenue? As we stand here today, there's really two large companies that are benefiting from AI. We discuss them often, Microsoft and NVIDIA. Everybody else has a story, but very little to back that up. And this is one of the topics going to be today. When is this real? When does it start contributing to revenue, and how much? Otherwise, less and less of these companies are going to get credit for it, because as much as it's an opportunity for these companies, it's also a threat. Any disruption to technology creates new companies, new entrants that can then take share from the incumbents. And that could be the case here. So we want to hear from Salesforce. When does this become real?
So the flip side of that, though, Gil, is that Salesforce has a big installed base, right? I mean, aren't they in a better position potentially, just in terms of the foundation they have, to convert some of those existing customers over to more AI services as they roll them out?
Absolutely. And they're trying to do that. But the question is, are those incremental dollars? And is that going to hold up as new entrants come up with new products to disrupt these incumbent businesses that Salesforce has been entrenched in for so long? So that really is where the burden of proof is. But yes, they're already able to get these products out. They have a big installed base. But one of the things we're seeing this year from Salesforce and others is a lot of these customers are saying, sure, I'll take a look at the new AI offering, but I'm going to do that instead of some of the other product I was looking at. So it's not necessarily incremental dollars. Sometimes it's instead of, or even delaying spend on other categories.